Thank you, Lascar Corla. I welcome the opportunity to comment on the withdrawal of the United Kingdom from the European Union 2019 bill. As previous speakers have alluded to, the UK is due to leave the European Union at the end of next month. And we do not know how or under what conditions they will leave. This bill is a product of that uncertainty. This bill is a prudent piece of legislation that I hope is never used, but hope isn't a strategy that Government of Ireland can rely upon. As Minister of State with responsibility for financial services and insurance, Brexit is a topic that is raised at every meeting that I attend. The uncertainty of what type of Brexit there will be is impacting on businesses and their investment decisions here in Ireland, not just the UK. There are a number of issues that are repeated and a number of problems that Brexit poses in relation to insurance from a financial service perspective. Firstly, contract continuity for consumers is the main risk posed in relation to insurance from a financial services perspective. In the absence of a political agreement between the EU and the UK insurers will no longer be able to write new businesses in Ireland on freedom of service or freedom of establishment basis, and will not have the authority to continue to service contracts that were concluded before the Brexit decision. In a worst-case scenario, this could mean that an insurer could or would not pay claims or benefits on their existing policies. This issue will impact some member states more than others, but given the substantial amount of cross-border insurance business between Ireland and the UK, it is important that we take the necessary steps to protect Irish policyholders through the proposed legislation for a temporary run-off regime. The Department of Finance and the Central Bank of Ireland have been working closely over the last number of months to come up with a solution to the issue which is contained in this legislation. The Central Bank of Ireland has also engaged with European Insurance and Occupational Pensions Authority, IOPA, to assess Brexit-related risks and potential mitigation, as well as issues relating to ongoing supervisory cooperation. With regard to Brexit and its impacts, the decision of the UK to exit the European Union undoubtedly poses challenges for the Irish insurance market, given the level of cross-border insurance business. This will be the case no matter what the outcome is of negotiations on the UK's withdrawal from the EU. However, in terms of general liability insurance, including employer and public liability in particular, I understand that the majority of the main non-life issuers operating in Ireland also write this type of business. In this regard, the Central Bank of Ireland have advised that in 2017, 40% of the domestic Irish liability market was provided by UK authorised insurers, with one large UK insurer accounting for 22% of the total liability exposure. The Central Bank notes that this insurer has implemented its Brexit plan for both new and existing business. The majority of undertakings providing liability insurance have developed and are currently progressing and implementing their Brexit plans on time for the 29th of March. As liability insurance is a commercial insurance product, the Central Bank expects that insurers' brokers are reviewing the capacity of the insurance market and ensuring that their commercial clients are provided with suitable products from insurers to match their commercial clients' needs. My view is that the impact of Brexit on the provision of insurance will not be that significant. I think of much more importance to the general health of the sector is the need to address the high level of awards for soft tissue injuries in line with the recommendations of the Personal Injury Commission. The government strategy to develop the international financial services sector, IFS 2020, was launched in 2015. That plan was based upon the 2009 plan, and so the plan stood for the greater part of a decade. Since May of 2018, officials in the Department of Finance and I completed a substantial body of work to prepare a successor strategy to the current strategy for the development of the international financial services sector, with IFS now 2020 being in its final year. I expect the outcome of the work will be concluded and a proposal will be brought to government in the next number of weeks, and I hope and anticipate that that strategy will move through the government processes before the end of March. The strategy, the growth in the sector of the IFS 2020, from the IFS 2020 strategy has not been limited to Dublin. Over 1/3 of the jobs are located in other areas of the country. The sector has a significant presence in a number of regional locations, including Cavan, Clare, Cork, Drogheda, Dundalk, Galway, Kerry, Kilkenny, Letterkenny, Leitrim, Limerick, Sligo, Tipperary, Waterford, Wexford and Wicklow. A number of international financial services companies have chosen to build centres of excellence in regional locations in Ireland, taking advantage of the opportunity afforded by the higher staff retention rates associated with operations outside of Dublin. I do want to touch upon the new strategy, Las Ceann Comhairle, because it's going to be important for the future, and the crossover between Ireland and the UK in terms of financial services is enormous. So the primary areas in which financial services are based upon international financial services are in funds. In Ireland there are 4.4 trillion euros worth of funds under administration. There's a lot of cooperation between Ireland and the UK, and without this legislation, potentially that sector is at risk. We have aircraft leasing, we have fintech, we have sustainable green finance, we have banking and payments, and other sectors as well. With the move in technology, it is really important that we ensure that the sector is on a strong footing to be able to continue trading with our closest partner, the UK. The crossover is enormous. The new strategy has four primary themes: communications and promotion. We haven't been as good at that as we perhaps should be, and to some extent we've allowed others pass us out because we haven't focused ourselves in that sector. The talent pool that is based here in Ireland for the financial services sector is second to none. And I say that, and that isn't my opinion. On every occasion I meet with senior executives from outside of here, they always highlight the standard of staff who are available. And that staff is a very diverse staff. A lot of it isn't from Ireland. A large number, not a majority, but a large percentage are from outside of Ireland. And again, the statistic that I use is at the time of the last census, 1 person in 6 wasn't born here. Now that figure is a lot higher than that is working in the international financial services sector. The operating environment will be crucial, and that's why this legislation is so important, that we've got to get the correct operating environment in place for what happens after Brexit. As I said, I highlighted some of the sectors that are very important, but there will be new sectors that will grow, that will be based upon new technologies. Payments is enormous here in Ireland and getting bigger every year. And we've got to be able to have cross-border... No, sorry. Unintentional. Okay, that's fine. We've got to make sure that we're able to continue the crossover of talent from the UK to Ireland. The Common Travel Area Agreement is hugely beneficial. Ireland will be the only country who is able to hire people from the EU, what will be the EU 27, and from the UK because of the Common Travel Agreement that goes back to the Anglo-Irish Agreement of 1921. And the final aspect then, Las Ceann Comhairle, in relation to the primary areas, is the area of innovation and technology. And we can't ignore that there are potential opportunities, but even more that we can't ignore are the potential challenges that technology could. The figure it's difficult to put a figure on it per sector, but some sectors are saying that technology could cost sectorally 1/3 of the jobs. I don't believe it's that high in financial services, but I do know it's high. But we want to make sure that we have the staff who are there, continue in the sector, continue retraining, and continue staying within the sector then as well. Then there are horizontals across those areas then as well. The horizontals are regionalisation. I touched upon that. We're absolutely determined that we continue the development of jobs outside of County Dublin. Everybody thinks all of the financial services sector is on the river, down on the docks, on the Liffey. It's not. We are outside of County Dublin. Sustainable green finance is going to be enormous now and in the future. Excuse me. And how we deploy capital can't be done in just one stream of capital. It will require private equity, borrowing, it will require funds investing, as well as government money, as well as funding from the multilateral banks also. So it is all of those streams being blended for the deployment of private capital. And then finally, the last sector is diversity, and trying to ensure that we have a higher diversity of not just male and female, and that needs to be improved, absolutely, but also in the space of people from different jurisdictions, from different continents, from different ethnicities, and people with different sexualities, because that reduces the group thinking that is in the sector. And all of this will be contingent upon ensuring we have a good trading relationship with our closest trading partner in financial services. With this bill, without this bill, there could be potentials that could cost a lot of jobs. Thank you very much.